afternoon. Today I have an update for Vascon Engineers Limited. It has sold or decided to sell part of its stake in Marathwada Realtors. So the total consideration of the sale is 18.72 crores, 100% dilution of the stake. So the company will cease to be a subsidiary of Vascon Engineers. So recent activity apart from the above information is Vascon Engineers has marked his entry into the Mumbai market with the launch of Vascon Orchids, a luxurious residential project through a redevelopment initiative on Linking Road in Santacruz West. The project is expected to gain a gross development value of about 300 crores in selling units. This acquisition aligns the company's growth and diversification goals of expanding its presence in Mumbai. Located in a prime location, Shastri Nagar, Santacruz West, centered around the theme High Street Living. Vascon Orchids will comprise three wings featuring 2 and 3 BHK homes offering 62 units to sell. The project delivers a blend of luxury, comfort, and convenience in one of Mumbai's most sought out neighborhoods. The company intends to expand its growth in Mumbai through redevelopment projects. Value addition and overall net profitability would be the growth story of the company. On the revenue front, maintaining the current revenue expectations is going to be a challenge. The stock is available for a low value, so a good opportunity to buy at the current price level. However, please consult with a financial stockbroker to check for the long-term value addition of the stock. However, there are a lot of concerns which play a negative factor and the sentiment towards the poor performance of the stock. Vascon Engineers' low share price could be contributed to factors like poor management efficiency, low promoter holding, and a history of weak financial performance. Here's a more detailed breakdown. Low return on equity has 7.18 over the last 3 years. Negative cash flow of minus 15.61. Poor asset management. The company seems highly inefficient in case of asset management. Low promoter holding. The promoter holding is at a low of 31.6 and 27.5% out of these shares have already been pledged. High contingent liability of 312 crores. Weak momentum. Price below short term, medium term, and long term averages. Low score company with weak financials downgraded by Markets Mojo analyst has been downgraded to a sell by Markets Mojo due to poor management efficiency. Stock PE below 10. Stock is trading at 0.3 times its book value. Company has delivered a good profit growth of 62% CAGR over the last 5 years. Company has shown good revenue growth of 28% for the past 3 years. Promoter holding is low. Company has low return on equity. Contingent liabilities of 300 crore. Promoter pledged 28% of their holding out of 31. Uh, Earnings include another income of 99.4 crores. Working capital days have increased to 246. Debtor days have also increased to 92. Days payable have also increased. This means that the company is taking longer than usual to pay its creditors. So, taking almost 6 months to make payments to its creditors. This would impact the overall goodwill of the company in the market. It will have a poor rating in terms of the supply chain. Return on capital low, 3 to 4% in the last 8 years. Borrowings have increased from 194 to 233 crores in the last 6 months. Other liabilities have increased from 687 crores to 886 crores. Negative cash flow of minus 15.61. Tax rate is low at 9.5. Promoter pledging is high. So ongoing projects: Platinum Square, Viman Nagar, Pune ongoing. Vascon Forest County, Kharadi, Pune ready to move. Vascon Forest Edge, Kharadi, Pune ready to move. Vascon Windermere, Koregaon Park, Pune ready to move luxury flats. Zircon, Vimannagar, Pune ready to move. So you can see out of the ongoing projects, so only one project is currently under construction. The other projects are ready, and probably the company has not been able to sell off its inventory, which is the reason why it is finding it difficult to have a good return on capital employed, plus also impacting the overall sales revenue growth. Company was set up. Company has a land bank of 273 crores acres, sorry, with a focus on real estate development in Pune and in around the surrounding areas. 30 years of experience in EPC, looking to enter and foray into the retail estate business. Land bank 28 million square feet, which is a developable area for the company. Focus areas: Vascon focuses on real estate development in Pune and other locations. So out of this 28 million square feet, we'll have to look which area that the company has got and what is the kind of revenue it can generate in the next 4 to 5 years. So that will be the key. Any new project normally takes between 3 to 5 years to complete, and if it is done building to building wise, it could be managed in a better way. However, it depends on how, which area, and what is the kind of market circumstances in the market at the moment. So focusing on real estate in Pune and the other surrounding locations, delivered 200 projects with around 50 million square feet. Vascon has experience in residential, industrial, IT parks, malls, hospitality and community welfare centers projects in Pune, completing and ongoing residential projects in Pune, including Zircon, Forest County, Phase 1 and 2 in Kharadi. That is what we just went through above. Other pro- projects in other cities like Mumbai, Goa, Nasik, Coimbatore. Vascon's approach: Vascon emphasizes applying the art of the value-based aesthetics into science of construction through efficient engineering, customer centricity. Vascon's approach is guided by principle of understanding and exceeding customer expectations. Financials: net sales were, and this is an old update, so you can ignore that. This is a quarter-on-quarter comparison, though it is showing 5% growth quarter on quarter. Overall financials are down. We'll have a look at that in a minute. Average industry is 29 companies trading at 17.4, book value 44.4, 0.83 times its book value, current price of 37, return on equity 7, ROCE 8.27, revenue growth minus 0.53%, profit growth minus 30% in the last 12 months, promoter shareholding 31%, public 68%, FIs 0.54, and no investments by the direct institutional investors. Return on assets is poor 3%, quick ratio of 1.22, current ratio of 2.03. Last 12 months earnings per share 46, inventory turnover ratio not available, interest coverage of 5.8, which is good, long term debt to equity of 0.58, total debt to equity. I think there is some mistake here. Total debt to equity, it will be higher because borrowings have increased. So this figure is not right. A range of long term debt is right. 0.58 seems to be correct. Asset turnover ratio is 0.48. Market cap of 825 crores. Cash of 66 crores. Debt of 152 crores. Founded in 1986. Based in Pune. Engaged in engineering, procurement, and construction, real estate, construction and development. Some of the projects we've already been through some of this information. Again, this is some of the old sort of information. Forest Edge Spring and Forest Country is 100% sold. Windmer Residential is 95% sold. Good Life Value Home Own is 79% sold. Tower of Ascent Kharadi 61% sold, and Tulip Phase 3 60% sold. So I think these are projects that have already been completed, and this set of information probably relates to FY24. So company has projects with expected sales of 1,377 crores in the pipeline, which will be launched in the near term with expected sales value of 880 crores. Ongoing projects, I think this we'll have to check whether these are still ongoing. I can see that real estate projects, almost all of them are complete here. So this is again is a 524, so slightly out of date. We need a more focused clarity on the current sector. So order intake, it's some other medical colleges and hospitals at Supal from PMC for a construction of one hospital in Moshi amounting to 357 crores, and also Capgemini order for construction of an IT central park in Chennai for 460 crores. So clients Cipla, IBM, Dr. Reddy's, GMR and VCC, Zenzar, etc. Some of the marquee clients of the company. I think sale of subsidiary. They've sold another subsidiary in July 2024, which was GMP Technical Solutions, 85% subsidiary. Company sold its subsidiary to Shinro Corporation for 157 crores. So let us look at some more information. This is the logo. This is another logo copy. Gaining ground on reality space. This is an update in October 2024. 36.5. Last 5 days minus 7%. 6% up in the last 1 month. 41% negative return in the last 6 months. Minus 45% in the last 1 year. Then market cap 837 crores, sales growth minus 0.53%, ROE 6.7, earnings per share 4.75 TTM, debt 152, cash 66, book value 46, face value 10, price to book of 0.8, PE of 7.8, price chart highest of 81 rupees on July 16th. Highest volume traded on July 16, 2024. Then price to earnings chart of 30 on July 16th again. Price to book value of 1.75 on July 16th again. Some companies and comparison with the market cap. Home Infra, SPML Infra. So most of these companies aren't doing really too well. If you look at the return on capital, see you can see price to book value 1 to 5 to 6, price to earnings ratio. Some of them are very high, some of them are as low as 5. So really unsteady kind of market here. Some companies may be good with the return on capital employed. However, you need to look at the overall price and what kind of revenue growth that it can sustain over a period of 3 to 5 years. This is again further analysis needs to be done. So there are 6 companies in this group. Shapurji Polanji Group, Afcon is one. Then Eureka Forbes. These are good companies. Sterling and Wilson, Forbes and Company. Then Gokak Textiles. Finally, last one being Vascon Engineers. The sales for the last 3 years 28%. Profit growth last 3 years was 55%, in the last 1 year minus 30. Return on capital has fluctuated between 4 to 7% in the last 5 years. So this is a big cause of concern. Return on capital 5 to 7% in the last 5 years, again a concern. Excuse me. This is good. Price to cash flow minus 53. I think, my friend, this is an outdated figure. This is as of FY24. The revised figure is much higher than this. This again is a negative cash flow, not able to generate sufficient cash flows in comparison to the price of the stock. Then this is efficiency ratio of 0.9, public holding of 68, promoter holding of 31. You can see here the pledged shares about 28% out of the promoter holding of 31%. Super investors, so dividend of 2.5 last in August 2023. Super investors Ajay Upadhyaya as of December 2024, 11 crore holding. Then Vallabh Bansali 8.44 crores as of December 24. Then Nimish Shah 32.5 crores as of December 2024. Then these are some of the promoters names. I think Vasudevan Ramamurthy individual is the highest investor here, of holding about 14% value, and all others are more or less within the same family, I believe. So something that needs to be cross-checked. Then the investors, in institutional investors' point of view, and the public, you can see some names here, different companies and different names. So you can go through this list for more information. Market cap, current price, we've been through all of this. And this is market cap again, a different set of companies to compare. You can see stock price to earnings again. We've been through some of these companies in the past. It doesn't seem as if this particular sector is not doing that well. The growth opportunities seem to be pretty less in this sector at the moment. Uh, Return on capital employed, again, it fluctuates between company to company. So more analysis and more detailed description on what kind of projects these companies are doing before you make a decision in whether to invest or stay in put if you are already invested. This is the last 4 quarters. The sales are inconsistent and fluctuating. Net profit uh, all of a sudden has jumped. I think it has another income of 78 crores, which is the reason why the company is in profit. Otherwise, the company would be at an operating net loss. Then overall profitability in the last 3 4 years again inconsistent. Yeah, these figures, I mean, they are fluctuating up and down. So whatever is bygone is bygone. What you need to look at is the current for last 1 year and how the overall sector is going to be performing. So as long as the EPC projects the company gets and it holds, that is a sufficient bigger part of the revenue, then it would be good. Otherwise, if it is just looking at the reality and the real estate uh, space, then growth will be difficult for the company. Reserves about 780 crores, not really too great. However, borrowings and the other liabilities is what concerns. Overall, it's increasing, which does not show a great sign. Then you can see debtor days increased, inventory days increased, days payable increased. Overall impact on the working capital because of the high inventory days, it's gone up to 234. That is it, friends. Thanks for watching. Thanks for connecting. Please share this with your friends, family, and associates, whoever may benefit from this information. Thank you for watching once again. I wish you a happy Eid and wish you a good week in advance. Take care. We'll connect with another video tomorrow. Thank you.